Question 3 here, slide 10. What to do with an ETF with low volume? This particular one came from Twitter and was really in regards to GK. So I think the again, I'm not going to kind of like, I'll use GK as an example here, but the concept remains the same across the board, and specifically whether it's from RTA or an ETF Pro product. If it doesn't fit your profile, certainly from like a volume standpoint, then then let's go like review what's inside of that. So if it's an ETF Pro, right, like it's an ETF, so it's going to have holdings inside of it. So let's review those. So if you pull up slide 12 there, guys, you can look at the top 10 holdings. Thank you. In there, you've got, Tesla, Microsoft, Netflix, Deere, just to name a few that are all bearish trend. And then Apple and Nvidia that are currently bullish trend, but have the potential to turn bearish if break below 152 for Apple, and 239 would be the trend levels that Keith gave us this morning, respectively, excuse me. So, analyze, what he's signaling within the RTA, and apply it to whatever works best within your portfolio. Taking into considering your risk management style, what you currently already have in the portfolio, right? So if you're already short a bunch of Tesla and Microsoft, Netflix, then adding GK probably you're just kind of doubling down on that exposure. So you really don't necessarily need to add GK. But for me in particular, for instance, when I see that signal in GK, I immediately go look at where are we within the risk range for something like an XLY or XLK, because those do hold Tesla. XLY has a big allocation to Tesla, and then XLK has a big allocation to both Microsoft, Netflix, and Microsoft, Apple, and Nvidia. So slide 13, guys, would be the XLY exposure yesterday. That circle was right around kind of the 255 mark where he hit the button on RTA, and the red and green, there's the risk range from the ETF Pro product. So that would have been the trend level risk range from earlier this week on Monday. And again, the XLY's has Tesla as a big exposure along with Amazon. So it was probing up near the top end of the risk range there, really kind of earlier in the day, and then gave you a little pop which Keith shorted, where Keith shorted GK. But again, I mean, if you're looking at this, you could have you really would be kind of executing on XLY either on Wednesday post the FOMC meeting, or first thing kind of yesterday morning as well, as we were closer to that 145 level. But yeah, so again, I just kind of wanted to show you that. And then on slide 14 as well, this is where XLK is. Now, this is the daily risk range, which had at the top end of the risk range of 145 as of which was taking into consideration Wednesday's close, where it opened higher in the morning. But we were hovering right around that top end of the risk range. Now that risk range has moved to 147 on the top end this morning as of March 24th. So Keith would have seen that inside of his signal, inside of his system. So we weren't quite there at the top end at around 3:00 when he hit the button on GK. So the GK setup was a better setup. But if you're looking for kind of like risk reward situation and GK doesn't fit your profile from a volume standpoint, you've got XLK inside the risk ranges every day. You've got the XLK risk range from the trend product, aka ETF Pro, and that was 132 to 145 this morning. So, as of Monday morning. So again, this is where you can kind of take all these different pieces of the puzzle and try to make a decision for yourself. And if especially if something like a GK doesn't fit your profile, your volume profile.